In early 2025, the financial world was thrown into chaos by a move that no one saw coming. President Trump signed an executive order, and within hours, Bitcoin plummeted by 6%. Now, if you've been following the crypto space, you know that a drop like that is a big deal. One minute, Bitcoin is soaring, making waves in the digital asset world, and the next, it's heading straight down. For crypto enthusiasts who had been riding high on the wave of Bitcoin's success, this was a major jolt. They watched in shock as their portfolios turned from green to red almost overnight. If you were one of those investors, you might have been wondering, how did this happen so fast? What did I miss? And that's exactly the point. Most people didn't understand what was happening, and they didn't realize that this wasn't just a simple market dip. What actually went down that day was part of a much bigger, much more complicated strategy that most people missed completely. What we were witnessing wasn't a random market event. It was the first move in a broader financial plan that could change the entire financial system, both in the US and globally. The media quickly jumped on the story, labeling it Trump's Bitcoin executive order. Crypto influencers took to social media, calling it a historic moment for digital assets. Wall Street, on the other hand, wasn't impressed. They called it a disappointment. But here's the problem: none of these groups truly understood what they were actually seeing. This wasn't just about Bitcoin or digital currencies. It wasn't even about making crypto holders rich. This was something much bigger, something that had the potential to fundamentally change how economies function. And what most people didn't realize was that it wasn't just one executive order. It was two orders, signed weeks apart, that together set into motion a series of changes that could have far-reaching consequences. The second of these orders, signed on March 6, 2025, contained language that should raise serious concerns for anyone who holds dollars, savings, or any traditional form of currency. But let's take a step back for a moment and look at what actually happened, because understanding this is key. The reaction from the market, the 6% drop in Bitcoin, wasn't just a random fluctuation. It wasn't a typical crypto correction. This was a sign, a signal that there was something deeper happening beneath the surface. And what is even more important is that the initial market reaction told us everything we needed to know about what was coming next. If you were paying attention, that drop in Bitcoin wasn't just about the price, it was about what the price drop symbolized. It symbolized a shift in the financial landscape, a shift that would be felt across the globe. But don't just take my word for it. Let's dive into what these orders actually say, what they were designed to accomplish, and why the market reacted the way it did. Here's the thing: this isn't about making Bitcoin holders rich. This isn't about pushing innovation in the way people think. It's not about building the future of money. This is about something much more fundamental. And once you start to see the full picture, you'll realize why economists, yes, economists are all raising red flags. Not a single economist, not one, has supported what Trump is proposing. In fact, they've all been very vocal about their concerns, because what is happening isn't just about digital assets, it's about how the global economy will be impacted by these decisions. Before we get into the details of the orders themselves, let's break down the timeline that led to this moment. The story didn't just begin in January 2025. It all started much earlier, during Trump's campaign for re-election in 2024. Trump made a bold promise during his campaign. He said he would create a Bitcoin reserve if he was re-elected. At first, this might sound like just another campaign promise, right? But it wasn't a casual remark. This wasn't just a way to rally the base or get a few more votes. No, this was a strategic announcement made at the Bitcoin conference. Trump knew exactly what he was doing. He knew the growing power of the crypto community, and he was positioning himself as the candidate who understood the future of money. And guess what? It worked. Crypto markets reacted immediately. Bitcoin surged. Crypto holders celebrated, thinking they had found their champion. Campaign donations flooded in from the digital asset sector. Trump was positioning himself as the future of crypto leadership. And for a while it seemed like this was a winning strategy. But here's the catch. Campaign promises don't always translate into reality. And once Trump was in office, the real challenges of turning those promises into actual policy became clear. When Trump officially took office in January 2025, the financial world was watching closely. The Federal Reserve, global markets, and major financial institutions were all waiting to see what would happen next. What they saw, however, wasn't the dawn of a new crypto era. Instead, they saw unprecedented risk. Risk that could shake the very foundations of the global financial system. The first executive order, signed on January 23, was titled Strengthening American Leadership in Digital Financial Technology. At first glance, it sounds like a positive step toward embracing digital currencies, right? A way to make the U.S. a leader in the digital age. But when you actually read the text of the order, things start to look a lot different. This wasn't just about embracing digital assets. It was about tearing down the existing regulatory frameworks that had been put in place to protect consumers and ensure financial stability. The order revoked Executive Order 14,067, which had previously outlined a responsible framework for the development of digital assets. It canceled the Treasury Department's International Engagement Framework on Digital Assets. It even stopped any government agency from promoting or establishing central bank digital currencies. This wasn't just deregulation. It was the demolition of safeguards that had taken years to develop. What was once there to protect people, keep the market stable, and reduce the risks associated with digital assets was suddenly wiped away. And here's the big issue. There was no new framework to replace these safeguards. No new oversight. No new consumer protections. No measures in place to ensure stability. Just a gaping hole where protections used to be. And the crazy part? This was only the first executive order. The real action came with the second one. The second order, signed on March 6, 2025, was where things really started to change. This order positioned Bitcoin as a strategic reserve asset. It started treating Bitcoin like gold or oil assets that countries hold in reserve to maintain global power and security. But this wasn't just about Bitcoin anymore. The order also created a fund for digital assets, setting up a long-term strategy for how the U.S. would manage these assets moving forward. Here's where it gets really interesting. The order directed the Treasury Secretary to create an office that would oversee all Bitcoin held by the U.S. government through criminal and civil forfeiture proceedings. Right now, the U.S. government holds between 198,000 and 326,000 Bitcoin, depending on who you ask. While the exact number is unclear, even at the lower estimate, that's worth between $17 billion and $28 billion. Under the previous policy, the U.S. government sold off seized Bitcoin at auctions. But this new order said that all Bitcoin held by the government would be kept. No more selling. It would be kept in a reserve, just like oil or gold, for as long as necessary. Let us take a deeper dive into the second executive order because this is where things start to get really serious. The second order, signed on March 6, 2025, was where the true nature of the strategy began to emerge. This wasn't just about protecting Bitcoin holders or promoting innovation. It was about fundamentally shifting how the U.S. government viewed Bitcoin and, by extension, digital assets as a whole. The second order positioned Bitcoin as a strategic reserve asset, comparing it to gold, and oil assets that countries hold in reserve for national security, economic stability, and geopolitical power. By declaring Bitcoin a strategic asset, Trump and his administration were signaling that they viewed it as something far more important than just a currency or speculative investment. They were essentially placing Bitcoin on the same level as precious resources like oil and gold. And that shift is huge. The executive order directed the Treasury Secretary to create an office to manage all Bitcoin held by the U.S. government. This Bitcoin wasn't just bought or mined for national treasure. It was seized in criminal and civil forfeiture proceedings. As of now, the U.S. government holds between 198,000 and 326,000 Bitcoin, depending on the estimate you go by. That's worth anywhere from $17 billion to $28 billion at current prices. What's most interesting here is that under the previous policy, the U.S. government would sell seized Bitcoin at auction through the U.S. Marshal Service. This was how they recovered the value and moved on. But this new order? It changes everything. Instead of selling off the Bitcoin, the government will keep it. It will no longer be sold at auction. Instead, it will be stored as part of a digital asset reserve, a national treasury of sorts. This Bitcoin will be held indefinitely, similar to how oil or gold reserves are maintained by countries around the world. At first, this might sound like a sensible decision after all. Bitcoin is now viewed by some as digital gold, so why not keep it as part of a strategic reserve? The problem, however, is that the executive order doesn't specify when or why these reserves could be used. The order simply says that the Bitcoin will be kept as part of the U.S. government's reserves with virtually unlimited discretionary use. That's a huge red flag. There's no oversight mechanism. No clear objectives for when these reserves could be tapped. No specific guidelines on how this strategic Bitcoin will be used. That's a massive amount of power in the hands of the government with no clear checks or balances. Imagine a world where governments around the globe start stockpiling Bitcoin, treating it like a national asset, but without the regulations and oversight that apply to other forms of reserves. This raises the potential for market manipulation, financial instability, and even political power plays on a global scale. The second executive order also authorized the Treasury and Commerce departments to find creative ways to acquire more Bitcoin, and I mean creative. This is where things get even more concerning. The order specifies that the government will acquire Bitcoin through budget-neutral strategies. What does budget-neutral mean? In layman's terms, it means that the government won't directly spend taxpayer money to acquire Bitcoin. Instead, they'll find ways to acquire Bitcoin without using taxpayer dollars. How? Well, according to B.O. Hines, the executive director of the President's Council of Advisors on Digital Assets, one of the ways the government might acquire Bitcoin is by selling U.S. gold reserves. That's right. The U.S. government might sell off a portion of its gold reserves, which currently sit at around $760 billion, in order to buy Bitcoin. Now, this is where things get tricky. Gold is a tangible asset with centuries of history as a store of value. Bitcoin, on the other hand, is only 16 years old and has never been tested during a major global financial crisis. You're essentially trading a stable asset, gold, for a highly volatile one, Bitcoin. This raises serious questions about the financial stability of the U.S. government, not to mention the broader global economy. Gold has been used to back currencies and provide economic security for generations. Bitcoin, while revolutionary in its own right, doesn't have a proven track record in times of crisis. So should the U.S. be selling its gold to buy Bitcoin? That's a question no one seems to be asking, but it's one that needs to be addressed. This proposal is just the beginning. Senator Cynthia Lummis has introduced the BITC Act, which would formalize these executive orders and expand them further. Lummis's bill proposes that the U.S. government acquire 1 million Bitcoin over the next 5 years. That's around 5% of the total Bitcoin supply. At current prices, that's worth around $88 billion. And here's the kicker: Lummis proposes a funding mechanism that could make this even more concerning. Instead of just selling gold, the bill would require the Federal Reserve to hand over all outstanding gold certificates to the Treasury Secretary. These certificates, which are valued at 1970s prices, would then be revalued to today's market price. This revaluation would create paper wealth that could be used to purchase Bitcoin. In essence, the government would create money by adjusting the value of its gold holdings on paper, and then use that new paper wealth to buy Bitcoin. This is a classic case of financial engineering. And while it may seem like it's budget neutral because no new taxes are being raised, it's essentially just shifting wealth around without any tangible backing. This kind of financial sleight of hand creates an illusion of wealth and buying power, but could have massive long-term consequences. Meanwhile, the second executive order establishes a separate U.S. digital asset stockpile for non-Bitcoin cryptocurrencies like Ethereum, XRP, Solana, and Cardano. Unlike the Bitcoin reserve, this stockpile could be bought and sold at the discretion of the Treasury. That creates a two-tier system where Bitcoin is held indefinitely while other cryptocurrencies are treated like assets that can be traded or sold whenever necessary. In other words, Bitcoin is being treated as the ultimate reserve asset, while other cryptocurrencies are treated as more disposable. What happens when countries around the world start looking at Bitcoin the same way the U.S. government does? What happens when nations start buying Bitcoin in bulk, stockpiling it as part of their own financial strategy? It could create a new kind of digital arms race, where countries are competing to acquire more Bitcoin, driving its price up. But what happens when this new kind of financial system comes with huge volatility, making Bitcoin more of a risk than a secure asset? That's where things get tricky, and where global financial stability could be put at risk. Let's not forget that the U.S. government's actions have global ramifications. The reaction to this executive order reveals how sophisticated institutional investors are in reading the signs. When Trump signed the first executive order on January 23rd, Bitcoin didn't just drop by 6% for no reason. That 6% drop was a signal, a warning. Investors who understand the complexities of global finance knew exactly what was happening. They understood that this wasn't about Bitcoin becoming a global currency. This was about the U.S. government gaining control over a massive new asset class. And that created concern. It wasn't just about the price of Bitcoin, it was about the potential consequences of these moves on the global financial system. The real impact of these executive orders is still unfolding. But one thing is clear, this isn't just about cryptocurrency. It's about how the government is positioning itself to control a new kind of asset that could fundamentally change how we think about money, wealth, and financial security. So by now, you should have a clear understanding of what the first and second executive orders were aiming to accomplish. The first one set the stage by removing critical safeguards that had been built around digital assets, and the second one introduced Bitcoin as a strategic asset for the US government. But here's where it gets even more intriguing and, frankly, concerning. Let's talk about the actual implementation of these orders. Because, in theory, everything sounds reasonable. The government stockpiling Bitcoin, treating it as a strategic asset, similar to gold or oil, that could make sense, right? I mean, in an era of digital currencies and financial uncertainty, having a reserve of Bitcoin could give the US a competitive edge in the global economy. It's an interesting concept on the surface, but once you dig deeper, the cracks start to show. First, we have to talk about the massive amount of Bitcoin the US government is already holding. Now, the exact number isn't entirely clear, but the estimates range from 198,000 to 326,000 Bitcoin, depending on the source you check. Even at the lower estimate, that's worth anywhere from $17 billion to $28 billion. These aren't just a few seized coins that are being held for safekeeping. This is a huge stash of digital assets that could have a profound effect on the market. So, what happens when the government decides to hold on to all that Bitcoin instead of auctioning it off as they've done in the past? Well, for one, it completely changes the dynamics of the market. Right now, Bitcoin's value is affected by the constant buying and selling of coins. But when you remove a huge chunk of Bitcoin from the market and put it into government-controlled reserves, you're reducing the overall supply. With less Bitcoin available on the market, the price could go up due to the law of supply and demand. That means that Bitcoin's value could be artificially inflated, potentially creating a bubble. And what happens when the government decides to sell off some of that Bitcoin? The price could drop dramatically, and that would cause serious instability in the markets. But there's another issue here: the government's plan to acquire more Bitcoin. The second executive order has a fascinating and somewhat troubling provision about how the US plans to build its digital asset reserve. It says the government will acquire Bitcoin through budget-neutral strategies. Now, if you're wondering what that means in simple terms, here it is. The government won't spend taxpayer money to buy Bitcoin. Instead, they'll get creative. They'll use financial strategies to acquire Bitcoin without impacting the national budget. One of the ways they might do this is by selling used gold reserves. Yes, you heard that right. The US might sell off a portion of its golden asset that has been used to back the dollar for decades and buy Bitcoin instead. This is where things get really concerning. Gold has been the backbone of the global financial system for centuries. It's a tangible, stable asset that holds its value even in times of financial crisis. Bitcoin, on the other hand, is only 16 years old and has never been tested in the same way as gold. In fact, during times of market turbulence, Bitcoin has often been just as volatile, if not more volatile, than traditional assets. So the idea of selling off gold to buy Bitcoin is a risky proposition, to say the least. Gold has proven itself as a store of value, especially in times of crisis. Bitcoin, while innovative and exciting, doesn't have the same track record. And that raises a lot of questions about the long-term stability of this strategy. But the concern doesn't stop there. The government is talking about acquiring Bitcoin for the next several years. Senator Cynthia Lummis, who has been a vocal supporter of Bitcoin, introduced a bill called the BITC Act. This bill would formalize the executive orders and take things even further. The goal? To acquire 1 million Bitcoin over the next 5 years. That's approximately 5% of the total Bitcoin supply. At today's prices, that's a $88 billion acquisition. And here's where it gets even more concerning. The bill proposes a funding mechanism that could allow the government to acquire Bitcoin without actually selling any gold. Instead, it would require the Federal Reserve to revalue its existing gold certificates, which are valued at 1970s prices, to today's market value. This revaluation would create a massive paper surplus that could then be allocated to Bitcoin purchases. In essence, the government would create new wealth through this revaluation, allowing them to acquire Bitcoin without directly spending taxpayer dollars. This kind of financial engineering is both fascinating and frightening. Think about it for a second. The US government, by adjusting the value of its gold holdings, could essentially print money without actually increasing the national debt. It's a way to boost the government's buying power without asking taxpayers for more. But what happens when this new wealth starts to lose value? What happens when the price of Bitcoin crashes and the government is left holding billions in a volatile asset? That's a massive risk, especially when you consider how little Bitcoin has been tested in times of true financial crisis. The government is betting that Bitcoin will hold its value, but the risk is huge. And let's not forget about the long-term impact this could have on the global financial system. As more and more countries begin to view Bitcoin as a strategic reserve asset, the price of Bitcoin could be driven up even further. Nations could start accumulating Bitcoin in an effort to secure their own economic futures, creating a new kind of digital arms race. But this kind of competition could create massive instability. Bitcoin is already a highly volatile asset, and when countries start using it as a reserve currency, that volatility could spill over into global markets. The world economy is simply not prepared for a system where Bitcoin is treated as a strategic asset by governments. The idea of Bitcoin as a strategic reserve also introduces the potential for market manipulation. If the US government holds a significant portion of Bitcoin, they have the ability to influence the market in ways that no other entity can. Imagine what could happen if the US decided to sell off even a small portion of its Bitcoin holdings. The price could drop dramatically, and the government could manipulate the market to their advantage. Now, I'm not saying this is definitely going to happen, but the potential for manipulation is there, and that's something the financial community is very concerned about. One of the major problems with this whole strategy is that Bitcoin has no track record as a safe haven asset. We've seen this play out before. During the 2020 market crash, Bitcoin dropped right along with the stock market. During the 2022 inflation surge, Bitcoin took a nosedive while gold held steady. This is a serious problem. Gold has been the go-to asset for governments and central banks when the financial system is in crisis. Bitcoin, on the other hand, has been shown to be just as vulnerable to market crashes as any other asset. If Bitcoin is going to be treated like gold in a national reserve, it needs to prove that it can hold its value during times of crisis. Right now, it hasn't done that. So the question remains, is Bitcoin really the right choice for a strategic reserve? And if not, what are the risks of putting all your eggs in this volatile digital basket? Now that we've explored how the US government is positioning Bitcoin as a strategic reserve, let's talk about the real-world implications of this strategy. As I mentioned earlier, the government is stockpiling Bitcoin. And we've seen that it could hold anywhere from $17 billion to $28 billion worth of Bitcoin at the moment. But here's where things get even more complicated. The scale of the government's Bitcoin holdings is likely going to grow, and that could have a massive impact on the entire global financial system. It's one thing to hold a few 100,000 Bitcoin that were seized from criminals or seized through forfeiture, but it's a whole different situation when the government starts actively acquiring Bitcoin as part of its broader economic strategy. Let's break this down. As the second executive order authorizes the US Treasury to continue acquiring Bitcoin, it doesn't just stop at budget-neutral measures like selling off gold reserves. The government is also looking at ways to secure the supply of Bitcoin through private contracts, financial mechanisms, and partnerships with other nations. In the long run, this could mean that the US controls a substantial portion of Bitcoin, enough to affect its value on a global scale. When you combine the government's holdings with the fact that there are already large institutional investors in Bitcoin, such as Tesla and MicroStrategy, it's clear that the amount of Bitcoin in circulation is being heavily controlled by a few large players. Here's the concern. When a single entity, whether that's the US government or a massive corporation, holds a disproportionate amount of an asset, they can influence the price and market behavior. This isn't a conspiracy theory. It's just basic economics. The more Bitcoin the government acquires, the less liquidity there is in the open market. And what happens when the government decides it's time to sell? Well, we already know that the market is fragile and that a significant sale of Bitcoin by any large holder could cause the price to plummet. That would create a huge problem, not just for crypto holders, but for the broader economy as well. After all, Bitcoin has been labeled a digital gold asset. So if the US government is treating it as a reserve currency, the collapse of its value could trigger massive financial repercussions. One of the other issues with this Bitcoin reserve strategy is the market's response to it. As we've seen with the initial reaction to the first executive order, The market doesn't like uncertainty. In fact, the 6% drop in Bitcoin's value within hours of the order being signed tells us everything we need to know about how investors are reacting to this uncertainty. When you introduce a large-scale, government-driven strategy like this, it creates major ripples in the market. No one knows how this will play out, and the uncertainty is enough to cause panic. The crypto market, unlike traditional markets, thrives on volatility but not on government intervention. What makes the crypto world unique is that it is decentralized and operates outside the traditional financial systems. But by bringing Bitcoin into the fold of government reserves, you're introducing centralization into a system that was designed to be the opposite. This centralization brings with it the potential for government control, market manipulation, and financial instability. Let's not forget that Bitcoin is still a relatively young asset. It's been around for only 16 years, and in that time, it's never been tested during a major global financial crisis. Sure, it survived some market crashes, but it hasn't yet faced a real global crisis, like the kind we saw in 2008 with the housing crash or the market plunge during the COVID-19 pandemic. During both of those times, traditional assets like gold and U.S. treasuries were seen as safe haven investments. But Bitcoin? It dropped. In 2020, during the early days of the COVID-19 pandemic, Bitcoin saw its value collapse along with traditional assets. It's clear that Bitcoin doesn't act like gold in times of financial crisis. That means the idea of Bitcoin being a stable reserve asset like gold or oil is, at best, unproven. At worst, it's a financial gamble that could have serious consequences for the US and global economies. Here's another layer of complexity. What happens when other nations start following the US lead and stockpiling Bitcoin? If the US government begins to acquire Bitcoin as a national asset, other countries may feel compelled to do the same. And when multiple countries start acquiring Bitcoin, it will affect the market in ways we can't yet predict. We could see a global race to acquire Bitcoin, driving its price up artificially. This would essentially turn Bitcoin into a speculative asset, with nations and institutions buying and holding it as a store of value. But this creates a dangerous situation. If the market becomes too dependent on Bitcoin, it could lead to extreme volatility when any government or major institution decides to offload their holdings. That's the problem with treating Bitcoin like a strategic reserve asset. It's still a highly volatile asset that doesn't have a long track record of holding its value in times of financial stress. This potential global rush to acquire Bitcoin also introduces the risk of market manipulation. Let's face it, Bitcoin is still a relatively small market compared to traditional financial assets. It's not like the stock market, which has deep liquidity and many players. The Bitcoin market is still dominated by a relatively small number of players. If the US government, for example, controls a substantial portion of Bitcoin, it can move the market with its actions. This opens the door to the potential for market manipulation, whether intentional or accidental. Imagine if the US Treasury decided to sell off just a fraction of its Bitcoin reserves. The price would likely take a huge hit and the market could spiral. That could create chaos, not only for crypto holders but also for anyone invested in the broader financial system. But here's another issue. If the US government starts stockpiling Bitcoin on such a massive scale, it will start to change the way financial markets view the asset class. Bitcoin could stop being viewed as a speculative investment or store of value and start being treated like a sovereign asset, just like gold. This would mean that Bitcoin's value would no longer just be determined by supply and demand, but also by government policies, national security concerns, and geopolitical decisions. For example, if the US government decides to use Bitcoin as a tool for economic warfare by buying or selling large amounts to impact global markets, what does that mean for the price stability of Bitcoin? How can you trust Bitcoin as a stable asset if its value can be affected by decisions made in Washington, D.C.? This brings us to the broader question of the role of Bitcoin in the global economy. Is Bitcoin truly a decentralized asset? Or is it just another tool in the arsenal of governments to control the flow of money and power? At this point, it's clear that the US government's actions are creating ripples that will be felt across the globe. As other countries watch how the US uses Bitcoin as a reserve asset, they'll likely start to wonder if they should do the same. This could create a new type of financial arms race, with countries fighting to accumulate the most Bitcoin. But if this happens, it will likely lead to instability. The price of Bitcoin will be influenced not just by the market but by political decisions made by governments around the world. This introduces a level of risk that we've never seen before, and it as a risk that could have devastating effects on both crypto investors and the global economy as a whole. The bottom line is this: by making Bitcoin a strategic reserve asset, the US government is opening up a whole new set of risks and challenges. The traditional financial system, which has long been based on relatively stable assets like gold, is being upended by a volatile digital asset. Bitcoin's value could become tied to political decisions, government strategies, and the shifting dynamics of international power. If Bitcoin becomes a strategic asset, the global financial system could be at the mercy of the US government's decisions, creating enormous uncertainty for investors, institutions, and governments alike. And when you have that kind of uncertainty, things can get ugly really quickly. As we've seen so far, the US government's move to acquire Bitcoin as a strategic reserve asset has far-reaching consequences. It's not just about Bitcoin holders celebrating or the price of Bitcoin. Fluctuating, this decision impacts global economies, market stability, and even the way we perceive money and power. But there's one critical question that has yet to be fully answered. What happens when this strategy fails? I know, it sounds dramatic, but hear me out. Right now, the Bitcoin market is already volatile. It's no secret that Bitcoin, along with other cryptocurrencies, is highly susceptible to dramatic price swings. We've already seen this happen several times, especially during major financial events like the COVID-19 market crash. During those times, Bitcoin didn't behave like a safe haven asset. Instead, it dropped right alongside traditional assets like stocks and bonds. This is a big red flag for anyone considering Bitcoin as a strategic reserve asset for a country. What happens if the US government's Bitcoin holdings drop significantly in value during a crisis? If Bitcoin is truly treated as a reserve asset, the US could face financial instability during times of crisis. Imagine a scenario where the value of Bitcoin crashes by 40%, 50%, or even 60%. What would happen to the US economy if the government is holding billions in digital assets that have just lost half their value? Here's where things start to get murky. Traditional reserve assets like gold or oil have a track record. Gold, for example, has been used as a store of value for centuries. During times of crisis, gold typically retains its value or even increases in value. It's tangible, it's stable, and it's been proven over time. Bitcoin? It hasn't been tested through a major global crisis. It hasn't yet shown its resilience in times of financial stress. Sure, Bitcoin has weathered a few market downturns, but we haven't yet seen how it holds up when the entire global economy is on the brink of collapse. Bitcoin's value could drop sharply in the middle of a global crisis, leaving the US government holding billions of dollars worth of an asset that nobody wants to buy or hold. Now, let's talk about liquidity. If the US government needs to liquidate some of its Bitcoin reserves to raise cash during a crisis, things could get tricky. Bitcoin is still a relatively small market compared to traditional financial assets. While the market has grown over the years, it's nowhere near as liquid as the stock market, gold, or even government bonds. If the government needs to sell a substantial amount of Bitcoin quickly, the market could easily be overwhelmed. The price of Bitcoin could drop rapidly, and the government could find itself in a situation where it is unable to raise the cash it needs without severely impacting the market. Now think about the knock-on effects this could have on global financial markets. Bitcoin is increasingly seen as a store of value, and if the US government sells large quantities of it, the value of Bitcoin could plummet, dragging down the entire crypto market with it. It would send shockwaves through the global financial system, affecting everything from institutional investors to retail traders and potentially causing panic in the markets. Let's also think about the implications for investors, particularly institutional investors. As Bitcoin's price rises and falls, so does the value of assets held by major financial institutions. If Bitcoin becomes part of the US government's reserve, it could mean that large institutional investors start holding Bitcoin as part of their portfolios too. But what happens when they're suddenly faced with the reality of Bitcoin's volatility? What happens if Bitcoin drops 30% in value in 1 week? These are questions that financial regulators are likely asking right now. And it's not just about institutional investors. What about the everyday person who holds Bitcoin as part of their retirement savings or investment portfolio? If the price crashes during a financial crisis, their savings could be wiped out. And that's the risk of holding Bitcoin as a reserve asset. Its value can change drastically and unpredictably, and that makes it a dangerous tool to rely on in times of crisis. Now let's zoom out and consider the global impact of the US government's Bitcoin strategy. Other countries are watching. If the US successfully establishes Bitcoin as a reserve asset, other countries may start to follow suit. China, for example, has already taken a cautious approach to Bitcoin, banning domestic trading and mining, but still keeping an eye on the market. Russia, too, has explored digital asset regulations, and it wouldn't be surprising if they decide to start acquiring Bitcoin as part of their own reserves. The European Union has been skeptical, but that skepticism may shift as Bitcoin continues to gain popularity. As more nations acquire Bitcoin, we could see a global arms race, where countries are trying to outbuy each other in order to hold the most Bitcoin. This could create massive volatility in the market as nations compete for control of the digital currency. And that leads to a whole new problem. Bitcoin isn't immune to geopolitical risks. What happens if a major conflict breaks out between countries with significant Bitcoin reserves? How would the value of Bitcoin be affected if nations started using it as a bargaining chip in global negotiations or as part of economic sanctions? This is a new kind of financial warfare that we've never seen before, and it opens up a whole host of new challenges for governments, investors, and financial regulators around the world. On top of that, Bitcoin's extreme volatility could have unintended consequences for other sectors of the economy. For example, let's talk about the banking system. Banks are already looking at Bitcoin and other cryptocurrencies as potential threats to their traditional business models. If the US starts acquiring Bitcoin on a massive scale, it could undermine trust in traditional financial systems. If people believe that Bitcoin is the future, they might start pulling their money out of traditional banks and putting it into Bitcoin, further destabilizing the financial system. At the same time, the banks themselves might start holding Bitcoin in their portfolios, but they'll also be dealing with the risk of that asset's volatility. This is a tricky situation for the banking sector. They can't ignore the potential of Bitcoin, but they also can't afford to become too exposed to its risks. It could lead to a situation where financial institutions are balancing the benefits of Bitcoin with the very real risks of its wild price swings. Let's also talk about the technical side of things. Bitcoin, by its nature, is a digital asset that relies on blockchain technology for security and transparency. But there are risks with Bitcoin that don't exist with physical assets like gold or oil. What happens if a government agency loses access to its Bitcoin reserves due to a technical failure or security breach? It is not like losing a shipment of gold or oil. Bitcoin is stored in a digital format and requires specialized security infrastructure to protect it. If the government doesn't have the necessary security systems in place, it could lose billions of dollars worth of Bitcoin to hackers or technical failures. And this isn't just a theoretical risk, it's something that has already happened on smaller scales. Various law enforcement agencies have seized Bitcoin in criminal cases, only to later discover they can't access it because they lost the private keys. If the US government's Bitcoin reserves are lost due to poor security, it could cause massive political and financial fallout. How would taxpayers feel if their government lost billions of dollars worth of digital assets because the proper systems weren't in place? It would be a disaster. In conclusion, we're in uncharted territory here. The US government's decision to treat Bitcoin as a strategic reserve asset could have far-reaching consequences for the global economy. From financial instability and market manipulation to geopolitical risks and institutional challenges, there is no doubt that this strategy will have a profound impact on how we think about money and assets in the digital age. The question is whether the US government's plan will succeed or fail, and if it fails, the risks are enormous. The volatility of Bitcoin, the potential for market manipulation, and the sheer uncertainty of how this all plays out could cause a massive financial crisis. But if it succeeds, we could be looking at a new kind of financial system, one that's based on digital assets, where the US and other nations hold Bitcoin as a reserve. Either way, the global financial system will never be the same. As we've delved into over the past few parts, the US government's decision to treat Bitcoin as a strategic reserve asset is an incredibly bold and risky move. This strategy is shaping up to be more than just an experiment. It's a pivotal moment in financial history that could define the future of global economics. But like any new and untested approach, it comes with immense uncertainty, volatility, and consequences that could ripple across financial systems worldwide. So far, we've explored how the US government is building a massive Bitcoin reserve, comparing it to traditional assets like gold and oil. We've also seen that the first and second executive orders signed by President Trump position Bitcoin not just as a speculative asset, but as a critical part of national strategy. And while this may seem revolutionary on the surface, there are plenty of risks lurking beneath. Let's take a step back and consider the long-term effects of the US government's decision to hold such a large portion of Bitcoin. One of the most glaring concerns about this strategy is Bitcoin's extreme volatility. We've all seen it. The price of Bitcoin can soar to new highs and then crash just as quickly. This volatility makes Bitcoin a risky asset, especially when you're talking about it being held as a reserve asset by a government. Traditionally, reserve assets like gold and oil are stable and hold value over time, even in the face of global financial crises. Bitcoin, however, doesn't have that track record. During the 2020 COVID-19 market crash, Bitcoin was no safe haven. In fact, it dropped alongside stocks and bonds, much like any other risky asset. So the question we need to ask is simple. Can Bitcoin really serve as a stable reserve asset for the US government? Can we truly rely on it to safeguard national interests, as we do with gold? The answer is unclear, and that's a huge risk for anyone government or investor holding significant amounts of Bitcoin. Another massive concern is the potential for manipulation and market control. When you introduce an asset like Bitcoin into a national reserve, you're putting the power to influence the market in the hands of a few. The US government's holdings alone could move markets significantly. When countries and institutions start to control such a large portion of an asset, they have the ability to manipulate the market by buying or selling at will. This could create instability, with Bitcoin prices fluctuating wildly as governments, institutions, and large corporations start to exercise more control over the asset. We've seen how market movements can be influenced by whales in the crypto world. Now imagine if a government holds a massive reserve of Bitcoin. How much control does that give them? And with that control comes the possibility for market manipulation, whether intentional or not. What happens when the US government decides it's time to sell off some of its Bitcoin holdings? The price could collapse, causing a domino effect across the financial system. This could lead to panic in the markets, and the fallout wouldn't just be felt by crypto investors. It would have a global impact. Bitcoin's volatility also opens up questions about the overall stability of the financial system. If governments, banks, and large institutions begin relying on Bitcoin as part of their portfolios, what happens when it crashes? Right now, Bitcoin is not as liquid as traditional assets like gold or government bonds. So, if a financial institution or even a government needs to liquidate its Bitcoin holdings in a time of crisis, it may not be able to do so without causing significant damage to the market. A lack of liquidity in a crisis could exacerbate the situation, leading to even bigger losses. This is especially true when considering the US government's proposal to acquire even more Bitcoin through budget-neutral strategies, such as selling gold reserves. This only increases the risk, as it exchanges a stable asset for one that hasn't yet proven itself in a real crisis. But it's not just the US that's affected. What about other countries? As the US moves forward with this Bitcoin strategy, other nations will likely follow suit, starting their own Bitcoin reserves. We could see a global race for Bitcoin, with countries trying to accumulate as much as they can, all while pushing the price of Bitcoin to unsustainable heights. This could create an entirely new form of financial competition, where countries are now playing a game of economic brinkmanship, each trying to outbuy the other in a race to control the digital asset. But as the price of Bitcoin rises, so does its volatility. If every nation begins treating Bitcoin as a strategic asset, we might find ourselves in a situation where global financial stability is threatened by the very thing that was supposed to provide stability: Bitcoin. What happens when Bitcoin becomes a geopolitical tool? We've seen how nations use reserves to exert power on the global stage. Oil reserves are often used as leverage in international negotiations, and gold reserves have long been used to maintain national security. But Bitcoin is different. Bitcoin isn't tied to a specific country's borders or economic system. It's a decentralized, digital asset that can be easily transferred across borders. This opens the door for countries to use Bitcoin as a bargaining chip in global negotiations or to conduct economic warfare. We've already seen how Bitcoin's value can be manipulated by large players. What happens if countries use their Bitcoin reserves to exert pressure on others? This could create a whole new type of financial conflict, one that's based on digital assets rather than traditional currency or commodities. Then there's the security issue. The government's plan to acquire Bitcoin on such a large scale raises serious questions about cybersecurity. Bitcoin, as a digital asset, relies on blockchain technology for security. But what happens when you start dealing with billions of dollars worth of Bitcoin? It's a prime target for hackers. The US government has a history of cybersecurity breaches, and the risks only increase when you start managing such a large, valuable digital asset. If the government can't protect its Bitcoin holdings, we could see a situation where billions of dollars are lost to hackers or technical failures. And there's no way to recover that lost Bitcoin. This poses a serious problem for anyone holding large amounts of Bitcoin, especially the government, which is supposed to safeguard national assets. If the government doesn't have the proper infrastructure to secure its Bitcoin reserves, it could be opening the door to massive losses. Now let's talk about transparency. Bitcoin's blockchain technology offers a level of transparency that's unmatched by traditional assets. Every transaction is publicly recorded on the blockchain, and anyone can view it. But if the US government begins holding Bitcoin in its reserves, will it maintain that level of transparency? Right now, the government holds Bitcoin through criminal forfeiture, but there's no comprehensive audit or public record of exactly how much Bitcoin it holds. This lack of transparency could erode confidence in Bitcoin as an asset and create distrust in the government's handling of it. And if the government is going to use Bitcoin as a strategic reserve, it will need to establish a robust system of tracking and auditing its holdings. Otherwise, we could see a situation where the public has no idea how much Bitcoin the government holds, or what it's doing with it. Ultimately, the US government's decision to stockpile Bitcoin has major implications for the financial system, both domestically and globally. There's no denying that Bitcoin has the potential to reshape the way we think about money, but its volatility, security concerns, and the potential for market manipulation raise serious red flags. If the government continues down this path, it could find itself holding a massive amount of Bitcoin that becomes increasingly difficult to manage, especially when the market becomes more unstable. We're dealing with an asset that has never been tested in a global financial crisis, and the risks of using it as a reserve asset are immense. Now let me ask you, do you think Bitcoin is ready to become a strategic reserve asset for the US government? Is it wise to rely on such a volatile asset to back up national financial security, or should the government stick to traditional, more stable assets like gold and oil? What are the risks of a global Bitcoin arms race, where nations start competing to hoard as much Bitcoin as possible? And most importantly, do you trust the government to handle these digital assets securely, or do you think there's too much room for error and manipulation? I'd love to hear your thoughts on this. Leave a comment below and let's discuss it. And if you want to stay updated on this evolving story and other important financial insights, make sure to subscribe to the channel. We've got more in-depth content coming your way and you don't want to miss it.